Welcome to Retire Rich, Tales of Financial Freedom with Mark Hernandez and Carlos Lopez from M.A.H Financial. In this podcast, we guide professionals of all generations, including Gen X, Millennials, and Baby Boomers, to answer an array of questions ranging from building wealth in 401k plans to selecting life insurance policies, including questions about IRAs, dividends, and bond alternatives. So tune in as South Texas's own financial advisors and fiduciaries, Mark and Carlos, draw from years of expertise, interview clients, and share stories of financial wisdom to accelerate your path to achieving your financial goals. Now, on to the show.
Welcome to today's episode of Retire Rich, Tales of Financial Freedom. I'm your host and advisor, Mark Hernandez. I'm the founder and CEO of M.A.H Financial Services. And if you've seen any of our other podcasts in the past, you've noticed that, I normally wear one of our t-shirts with a logo or a polo shirt with a logo on it, or a shirt without a tie. But today, I'm wearing a tie today because we need to talk about some serious business going on right now. It's all in the headlines every day. And we've got people right now. I've got, my clients calling me, prospective clients calling me day and night, wanting reassurances. And I just want to have a conversation today about what you should be doing right now to help alleviate your stress, your anxiety, your tension of today's headlines. The big problem right now is consumer confidence. The consumer is very concerned. I mean, if you've got a 401k, you've seen it go down quite a bit recently. Your savings, you're not getting as much money. Interest rates possibly could be coming down soon. So these are some things we want to talk a little bit about today. One is, of course, one of the major topics has been inflation. Well, inflation it's every now and then it starts coming down. I mean, of course, it's not at the all-time high from over a year ago or a year and a half ago, but it's starting. It started making progress, but now it's basically got stagnant, and we've been close to an inflation rate of 3%. A little over 3% for a while. The Fed would like us to get to 2%. That's their ideal outcome. But the thing is that we may not be able to get there. We may have to live with 3% inflation to make sure that we get back on the right track. The thing is that the policies of our government are very aggressive. And, they received a mandate in the voting to make many changes. But I can tell you this, I don't think anyone expected this type of volatility right away. So the thing is that right now, with the headlines happening, with the policies, that we've seen some huge drops in our equity markets. The bond markets have not been left unaffected. There's just so much anxiety out there, and I just want to have a little conversation about that. One thing that's happening is, in the past, when this was happening, when COVID hit, the equities took a big hit. There was a lot of uncertainty, and the thing is, the Fed stepped in. And the Fed helped alleviate that by maintaining the low rates at that time. Right now, the Fed is being very hands off. Right now, they're seeing the economy. Their feelings are the economy is still running hot. And but the thing is that hopefully we'll get some Fed rate cuts here in the near future and through the year, which will allow the burden of people that want to buy homes or buy durable goods, they'll be able to confidently do that. And that should help stimulate the markets. The big thing about right now is tariffs, okay? Tariffs are not good for anyone. I mean, basically, tariffs pretty much, they can work positively if they're done strategically. And if they're done strategically, they can put us on a fair playing field. But the thing is, the way these tariffs have been put out, and the way the tariffs have been assessed to almost every nation out there, even our strategic trading partners, it is causing a lot of volatility. Tariffs can raise inflation. They raise prices. I mean, it makes for things that you want and that you use that we import from other countries, it just makes them more expensive. And the thing is that you've probably heard in the headlines, and it was a shock to me that many of our pharmaceuticals come from China, and a large percentage, 95% of our ibuprofen comes from China. And I know our pharmaceutical companies are utilize other countries to make their product, so that way, they can. I guess sell it cheaper here. Obviously it's to make a bigger profit. I mean, that's what corporate America does. They're in it to make a bigger profit. But the thing is that when situations arise like they're arising now, where they're putting tariffs and taxes on everything that's going to come into this country, it's going to be passed along by corporate America to us, the consumer. Okay, so that's a major problem and a major issue, and that's one of the biggest issues that we're seeing, this volatility in the stock market, and that's how most of us have gotten successful and rich over the years, is by utilizing equities and by utilizing bonds and by investing strategically and at work to enhance and plan for planning to plan and use this money to send our kids to college, to pay off our homes, to pay off a large debt, to plan a very successful retirement. And that's what we primarily do here at Retire Rich, Tales of Financial Freedom, is try to share ideas that will allow you to reach those goals. Okay, but right now things are extremely volatile, and people don't know which way to turn. So I just want to share a few things, and have a conversation with you, share conversations I'm having with clients, with prospective clients and other advisors at this time, and what we're doing to try to mitigate this anxiety and volatility for our clients. One of the things that we're doing right now is to make sure that we're having conversations with our clients and letting them know, first off, to see if their goals are still the same, if their timeline is still the same in terms of how much time they have before either retirement or before a major purchase or before their kids go to college. These are the conversations we're having at this time. Well, the thing is that in the past, we've seen that anytime there was a major correction in the markets, I've been doing this for over 40 years. So I was here in 1987 when we had the first major stock crisis. But let's go to 2001. In 2001, 24 years ago, of course, the terrorist attacks, which affected our consumer confidence tremendously. There was downturns in the market. It lasted for a while, but it came back and just appreciated and went up. Well, then we look at 2008. In 2008, the mortgage and security crisis, the bank crisis, markets were volatile at that time. The government intervened and they shored up the banks, and they changed the regulations to make sure that would not happen again. And we haven't had any issues with that. And our banks are for all practical purposes, very strong. And our financial institutions are strong, and we can have confidence in them. COVID hit. Well, that was something that we had never seen before. Where the government got involved and basically subsidized a lot of the country, and the markets reacted similar to what they have done with the tariffs. Went into corrective territory quite a bit, but came back and came back very quickly. So that was an opportunity for people to buy and when things were down and and they've appreciated and enhanced their portfolios. But the thing is that as a holistic advisor working with our clients, the most important thing is to understand your clients' risk tolerance, to understand what their timeline is and their goals, to put them in the right programs to make sure that they meet those goals, even with something happening like it's happening today with tremendous volatility and uncertainty. And I think that is a key word, uncertainty. We're not sure how long this is going to last. How long is this tariff war going to go on? How long are other geopolitical issues such as the wars in Ukraine, the wars in the Middle East going to go on? Okay, how long is this situation regarding our immigration going to go on? So these are things that create uncertainty, and consumer confidence does not like uncertainty, and the markets do not like uncertainty. So as an advisor, we have clients that we have in safe money programs. And they have not been really affected because these safe money programs, and we utilize multi-year guarantee annuities. And the way that works is that a client puts money in and they have a guaranteed interest rate for 2 years, 3 years, 5 years, 7 years, up to 10 years, depending on what they want to accomplish. So, and those aren't really affected at this time. They're earning the interest rate they were promised and guaranteed, and they're doing fine. And then we have clients that have other safe money programs, and we utilize fixed index annuities. And index annuities, we had clients in those in 2001, 2008, COVID, and they did very well. They came out of it very well. They were not affected by losing principal because their principal was protected. And so these are conversations we have with our clients that calling in and they're concerned about what's going on. And if they are in these type of products, we explain where they're at, how the products work, to make sure that it reduces that anxiety and that tension. So that way they know that their principal is secure, and even their earnings. Some of these programs lock in their principal every 2 years or every year to whatever their gains they're earning are not affected or lost. Okay. Now, clients, we do manage money, we do planning, we do fee-based business, and those clients are being affected at this time. And what we do is if their timeline is much longer, they're maybe 5 to 10 years away from retirement or longer, at this time, we're probably not recommending, unless their risk tolerance has changed, we're not recommending any modifications. Because the thing is that the way you can lose in these times is if you change your position or you take out money when the market's going down, well, you're locking in those losses. Okay, but again, if you're patient, if your timeline and retirement timeline or your investment timeline is a little longer, well, we've got an opportunity to be patient and let these times recover. But if our clients are concerned, we're reevaluating their risk tolerance. We're asking them to do a new risk tolerance questionnaire, probably getting a new risk tolerance score, which will mean that we need to make some adjustments. And at that time, they need to be made aware if their balance is lower than it was previously to this turmoil and volatility, that those gains or those losses will be locked in. But the thing is, if they're still concerned, we'll make these adjustments, put them somewhere that might be more conservative. That way, if this volatility continues, they won't feel it as much. But again, the conversations we have with somebody, and something I want you to realize, if you've been an investor for over 10 years or more, let's say even over 5 years or more, you've seen your balances go up tremendously. I mean, just a few months ago, we were at all-time highs in the NASDAQ, the S&P, and the Dow. And so now we're in corrective territory from them. But if you think about if you started investing 10 years ago in a 401k or just in a portfolio, you've probably seen your portfolio double, triple, or go up quite a bit over that time frame. So this uh, um, reduction in your portfolio balance, it is hurtful. And it is concerning, but the thing is, we try to point out, well, this is look at your cost basis. This is what you put in. You still have had gains, and at that point, that can give them some assurances and reassurance. But again, this is something you have to monitor. And the thing is that my advice is, if you have an advisor that you're working with closely, you should already been having conversations with them a week or two ago, okay? And you should be looking at your portfolio frequently, and you should be having conversations frequently. As long as, now again, if you feel comfortable with the situation, if you've got the patience, and your timeline is much further out, and you understand what's going on, then you should be fine. Okay. Again, we don't know when the market's going to come back to where it was previously before it started going down, but we've been through this before. Okay. And I have every confidence that we will get back to where we were. The thing is, we don't know how long. We just don't know how long. But the thing is, work with your advisor to have a conversation. And if you're concerned with this market volatility and you do not want to have this happen in the future, you could talk to your advisor about safe money programs, as I described earlier, where there is safety in your principal. You still have upside potential of gains, but the thing is that there's no risk to your principal. So I would say you want to go ahead and have conversations. Do not bury your head in the sand. Do not just file your statements. Take a look at them, see how you're doing, and have a conversation with a trusted advisor, a competent advisor that can help you during these times. Yes, TikTok put out that the top 4 banks will approve new LLCs, limited liability corporations, for $50,000 or more without proof of income. Oh, Chase Bank's the greatest of all time. PNC Bank's fantastic. Bank of America, they will in some cases approve more than one card the same day. Navy Federal Credit Union, the OG of high limit. Well, I'm here to tell you that's a bunch of baloney, okay? I'm sure that you're aware that there's all types of scams, and they're getting better and better at doing it. The thing is that you cannot just go and get money for a new business just because you opened the business. You have to be credit worthy. You have to have a credit history. You still have to fill out applications and probably go through an approval process. You may have to bring in financial statements for the last 5 to 10 years. There's always things that people are putting out with the intent of scamming you. Okay, their intent is to make money from you. Their intent is to put out something so outrageous, they'll get so many views that they'll be compensated for the total number of those views. And that's a big problem nowadays. People, for someone like me, 40 years in the business, building credibility, you need to build credibility. You need to build, if you're starting a business, you need to go out and work hard to build your clientele and to establish credibility. Okay, to get money, most people fund their businesses with their hard-earned savings, or their family's hard-earned savings that believe in them and give them money to start their business. Or sure, if you have assets that you could use as collateral, you can go use those assets as collateral. But the thing is that we just want to debunk this idea, and people waste their time and embarrass themselves by going into a financial institution and say, hey, I started an LLC. Just start an LLC. You can do that on various sites and form an LLC. And the thing is, they're telling people you form an LLC, you're going to go get money. That's a bunch of baloney. Okay, so please don't believe these things. And you know what? When you see something on the internet, whether it be on YouTube or TikTok, and it seems so wow, so crazy, so far-fetched, do yourself a favor. Don't even click on it, because you're doing them a favor. You're giving them a click, you're giving them a view, and you're making them money for wasting your time. So that I just wanted to just give you my impression of these ads. Thank you, and I look forward to seeing you next time.
Thank you for listening to Retire Rich, Tales of Financial Freedom. Have questions about topics covered during the show? Visit our website at www.mahfinancial.biz or give us a call at 956-994-0407. Don't forget to click the follow button to be notified when new episodes become available. Investment advisory services and financial planning services are offered through Simplicity Wealth, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm, nor does it indicate that the advisor has attained a particular level of skill or ability. Insurance, consulting, and education services offered through M.A.H. Financial. M.A.H. Financial is an unaffiliated entity from Simplicity Wealth. Clicking the like button does not constitute a testimonial for or an endorsement of our investment advisory firm, any associated person, or our services. Clicking the like button is merely a mechanism to circulate our page. Like is not meant in the traditional sense. In addition, postings to our page must refrain from recommending us or providing testimonials for our investment advisory firm. Because the SEC and state securities regulators generally prohibit testimonials, any such postings are subject to swift removal.